Where do people start?
Well, the temptation is to start with the rules of thumb that are out there, right? I think everybody's heard of the 80% rule. Hey, take what I'm spending today, and I'm going to only need 80% of that or 80% of the income in retirement. And that very well could be the case. But if you want to be confident about the answer, you really have to start with the budget. You can't just use these rules of thumb.
And I think in general, it's better to assume, hey, if I was spending X before retirement, that's probably the good starting point, because there may actually be more opportunities for me to spend money in retirement with all this newfound free time.
Yeah, so I mean, income versus expense is important to differentiate here. And sure, if you're 40 years old and trying to figure out what it's going to look like 25 years from now, using a rule of thumb is fine. But if you are a year away from retirement, you have to take into consideration things like, hey, will I still have a mortgage at this stage?
Right.
I'm pulling in income. How much of my income is going towards retirement savings today? Clearly, I don't need to replicate that once I'm retired. But just saying, oh, well, I'm spending X and it should be, 3/4 of that when I retire, in my experience, not what people experience.
Our guide this month is titled How to Retire in 2023, and there are two different ways that you can request it. The first is by calling 800-393-4001. The second way to request it is by going to armstrongadvisory.com. The guide again is titled How to Retire in 2023, and you can call 800-393-4001 or go to armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Our community has relied on AM radio to inform, entertain, and empower. From the gospel music you grew up with to the Black voices and perspectives you depend on for your news. And when dangerous situations arise, AM radio plays a unique role in keeping our listeners safe. We can't afford to have our voice silenced. Text AM to 52886 and tell Congress we need AM radio in cars.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier. With no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com. There are plenty of mistakes that you can make while creating your estate plan. Learn about these critical errors so that you can make the right decisions to always protect your assets. Call Cushing & Dolan right now at 866-848-5699 and get their new guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699 or request it online from their website, legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends. Plus, breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by taking part in this year's DAV 5K. For more information, visit DAV5K.Boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Welcome to this Wednesday edition of the Financial Exchange. Paul Lane, Marc Fandetti with you, and Tucker Silva working the boards as we've got a jam-packed show for everyone out there today. We had news that came out earlier this week that the McCarthy, House Speaker, and President Biden agreed on a preliminary measure to resolve the debt ceiling. We had another step in that process last night in which the House Rules Committee voted to advance the negotiations to the House floor. So that vote will be later today, Wednesday night, regarding the debt ceiling. We also had some information coming out on job openings, and we've got a market today that is in negative territory. The Dow Jones off about 240 points, S&P 500 off a little over 0.5%, and the NASDAQ is down about 0.25%. Mark, we'll start it off here with the jobs openings data that we just got out in the last 5 minutes or so. The number of vacancies in the U.S. rose by 360,000 to 10.10 million in April of 2023. That was up from 9.75 in the month of March. Just want to get your initial take off of those numbers that we just saw.
I don't care. I don't care anymore. I think, the reality of this is that, look, okay, thank you for updating us. I don't want to completely dismiss.
We do have to mention it.
Yeah, it is news in the literal sense of the term. Or it might be noise. We don't know what the right variable is. Is it unemployment? Is it job openings? Is it wages? Researchers who try to predict inflation need something to put into their models. Mm-hmm. The unemployment rate didn't work real well. It was still high. Inflation started ticking up. It went really low. It wasn't a good predictor of inflation, is what I'm trying to say, in the most recent cycle. It also was not a good predictor of inflation immediately following the Great Recession. So people turned to vacancies, the so-called JOLTS report, Job Openings, Labor Turnover Survey, Paul, which is what you just reported on and what I just dismissed out of hand. The reason I get a little frustrated with all of these data points that aren't put in context is that unless you're thinking about them in the framework of a particular model that you use to make predictions, I think they mostly confuse people. Mm-hmm. Okay, so what did we learn today? We learned today the labor market is still tight. This confirms evidence that we've been getting from any number of series since more or less the COVID recession, since not long after the COVID recession ended. I'm just not sure how useful this is, unless you have a very specific model in mind, at telling us anything about the future. It tells us, it confirms what we already know, so in that sense it's useful. But I think for the average person, it probably just makes things cloudier, all of these data points. So at some point I kind of throw my hands up and say, yeah, it's confirming what we knew. Interest rates are still too low.
Right.
So let me just take this back and try to level out here a little bit and tie it into something rational and coherent. Interest rates are still too low. Based on the level of inflation, that is to say, real interest rates are still too low. Fed has to continue to hike, probably. And that is what this number confirms. And maybe that's part of the reason for the market's negative reaction today. Mm-hmm. But I think getting too excited one way or the other over a movement, I don't interpret this. Now, it is a jump of, what was the headline number?
We came in at 10.10. That was about 360,000 that
so
jump
rounding up. Okay, so an increase. So what does that mean? Did the labor market get tighter last month? Is this number just noisy? Mm-hmm. Does it matter at all? Researchers don't have definitive answers to any of these questions. I guess on the margin, if you had to try to extract something from this, since it is news and we hope it is somewhat meaningful, although I think that's doubtful, as I've suggested, I guess on the margin it points to continued tightness in the labor market. Right. But we kind of already knew that.
Yeah, it seems like I would imagine, in your opinion, that we would have to see several indicators from all sorts of different labor data going in the other direction with substantial loosening for you to really even bat an eyelash at some type of
you
report
know what
like
I'd really
this.
like to see, Paul, as an indicator that inflation's coming down? I'd love to see inflation coming down.
We cover that all the time, and that
right?
we're nowhere near
let's
that.
just, at the end of the day, we need inflation to come down. No, look, it has come down a lot in the past year.
Right. But it's that next hurdle that seems to be presenting sort of to be elusive, is getting it under, and to your point,
That's a great word.
Perhaps it is more rate hikes, and I would agree with that sentiment in general, but it's easy to get it from 8 or 9% to 4.5 to 5. The harder jump comes from getting it from 4.5 to 5 down to 2%. It seems like that's the point where we're at right now.
Well, it depends on what you think causes inflation. If inflation is running at 4 to 5, because that's where expectations are, which is more or less where they are, then the Fed's got some work to do. It's got some credibility to earn back. If you think inflation is at 4 to 5 because of some special factors, some people like to look at inflation on a bottom-up basis, and they look at services and durables or used cars and all these one-offs. I don't find that as a particularly productive way to forecast inflation. In fact, it's a terrible way, empirically speaking, evidence speaking, that is to forecast inflation. But it depends on the model you have in your head.
Let's pivot to one of the tools that the main tool that the Fed has to address inflation and its impact. There's a piece in the Wall Street Journal today, Mark, where it says, "Where is the U.S. economy headed? Follow the money." And in this particular piece, they seem to be alluding to the fact that lending markets are getting much tighter, and some of the issues that we've seen in commercial real estate, as well as just regional banks and lenders in general, that they're starting to observe that data, there's less lending activity going on. That has been one of the major initiatives when we talk about rate hikes. It's to slow down this type of activity and to tighten up lending conditions so that there is less capital flow in the system. Curious to take your take on that, the tightening and any data that you've seen. I'm going
to have a similar reaction to my reaction to economic news generally. This article is kind of an incoherent data dump. It's commercial
very
real
anecdotal,
estate
it
focus.
seems.
Yeah, which is fun. But again, if you're not plugging these things into some sort of a mental framework, it would be like you set out to bake a cake and you just know the ingredients, but you don't know the proportions, you don't know the order they go in. So you just start. I ask you, Paul, how do you make that delicious bun cake that you make? And you say, well, flour, sugar, and I don't know. I don't cook.
I read the back of the package.
You read the back and you follow it closely. The point is, you've got a recipe, you have a framework. Pieces like this in economic news, generally the way it's disseminated, it doesn't come with a warning that says you should have some sort of framework or model, which most people don't, because most people aren't trained researchers, which is totally understandable. So the interesting things about this article is that yes, there is distress in commercial real estate. And I think you made the key point, which is the Fed tightening is supposed to induce stress in areas where things got a little too frothy.
Right.
So that is the whole point. That's how Fed funds rate hikes work.
Yeah, it's interesting because I do want to see and hear more data here, but to your point, it's just mentioning that banks are charging higher interest rates. They're making them post more collateral. Okay,
No
so
kidding.
that's how it goes, but give me numbers to show that lending has significantly suffered. They mentioned Signature Bank had a very strong presence in New York City in terms of its commercial real estate lending arm. Okay, how much of a drop-off in activity has there been in lending in New York? Give me some more data points. And to be fair, it's too early to really wrap our arms fully around the impact of the regional bank demise, what it's had on lending. But it's something that we're eagerly awaiting to try and get our arms around what that impact is. So we'll continue to monitor that. But at this point, to your point and my point, it's more anecdotal.
Yeah,
here.
I just didn't get the sort of, look, these newspapers have to fill a lot of
Right.
space. We have to fill a lot of airtime every day.
It's
So
a
you
daily
gotta-
grind.
There's stuff to talk
Yeah.
about. But I'm not sure what the synthesis of all this is. What is a reasonable interpretation of the sum total of everything that's written about in this article? There's some trouble in commercial real estate, some pockets of commercial real estate. So what do I, as an individual investor or as an economic forecaster or as somebody who's just interested in what's going on, what do I do with this information? Unclear to me what the upshot of this piece is, other than what we already knew.
Right.
There were excesses that had built up over particularly the past few years in commercial real estate. Now that the Fed started hiking, there's a little bit of a reckoning. As you said, that's kind of the way it goes.
Exactly. We're going to take a quick break here on the Financial Exchange. When we come back, I want to talk about consumers and just the way they feel about the economy and where they are positioned. That's going to be right after this break here on the Financial Exchange.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
If you're thinking of retirement in 2023, you'll need to create a plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A big piece of that plan is taking a closer look at your current income sources and expenses. You'll need to know if you have enough room in your budget to live comfortably and remain as financially secure as possible. What's really key is maintaining a reasonable withdrawal rate to help you avoid outliving that money. These are among the topics we discuss in our new free guide, How to Retire in 2023. Call right now and get your copy today at 800-393-4001. Don't wait too long to get your ducks in a row if this is the year for you to retire. Call 800-393-4001 and get your guide right now, or you can request it from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your beneficiaries to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
Yeah, it sure would. And again, sometimes simple is not always better. And that's what I want to focus on here, folks, is it seems easy to throw an account name, like say I've got a child living nearby, I add their name to my account because it's convenient, but I've got 3 other kids or 2 other kids. Well, when I die, that asset will go directly to that joint owner. Yes, it will avoid probate, but at the end of the day, I could be disinheriting my other children by accident. I certainly don't want to do that. I also expose that asset, at least 50% of that asset, to my child's creditors while I'm living. I don't think I want to do that. And especially, folks, when it comes to real estate, don't add a child's name to your real estate deed, because that not only exposes it to the child's creditors and future divorces, but at the end of the day, you've also given away half the house, trapping half the capital gain in that property. Again, in essence, giving your child a tax bill when you give away highly appreciated property. So do an entire estate plan. Don't just make quick knee-jerk reactions.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. You can request this brand new guide by calling 866-848-5699, or you can request it from LegalExchangeShow.com. Once again, the phone number, 866-848-5699, or you can simply request it online at their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
We talked about this heading into the break, but consumers tell you that they're hurting. There's a Bloomberg article here. Believe them. There was a recent survey that was done where they tried to gauge the American consumer and how they feel. 83% of them indicated that the U.S. economy was in either fair or poor condition, and 72% of those surveyed expect it to get worse. However, on the contrary, 75% of those same households say that they personally are doing fine. And there seems to be this huge divergence, Mark, between what households feel about the U.S. economy versus how they are doing in general. And the reason that we touch upon this article is expectations for the U.S. consumer regarding the economy is really important to inflation. You had mentioned that idea before, how they feel things are can impact sort of their thoughts for inflation going forward. So interesting to hear your thoughts on the survey. I know it's a survey, so that's right. It's hard to really get finite detail, but just maybe perhaps from the consumer expectation piece of it, does this weigh into any inflationary impact?
Well, we survey that. Researchers who specialize in that area survey that separately, and people, and these two things may be connected. People say they're hurting because of cost of living, which is correct and understandable. Mm-hmm. At the same time, it is puzzling that so many people rate the economy generally, not their own situation, but the economy generally is poor, and yet continue to spend. Mm-hmm. Surely they know that unemployment is at 3.4% now? Yep. Okay. So levels not seen in consecutive months since the late 1960s. The economy, by many measures, is strong. By other measures of consumer discomfort, though, are high, is what I should have said in that sentence. So I don't know what to make of these surveys are so-called soft data. They don't measure what people are doing. They just measure what they're saying. They may be saying it because that's what they're hearing on the news. We know Fox News tells it, and I'm a viewer, mm-hmm. and I sympathize with them economically. I really do. As a fiscal conservative, I just want to preface this by saying I'm not some left-wing nut. Not to say that some left-wing people don't have reasonable economic views. They do. They're just mostly wrong. That said, you watch Fox News, you think the economy's terrible. Right. You think every little regional hiccup is a point of major economic disturbance, and diesel prices and all these other things they get their viewers excited about. So maybe some of this is political. I don't know.
I would agree. It's not necessarily political, but maybe media driven. I feel like very few people out there would recognize that the market is up close to 10% year to date. A lot of that is concentrated in just a few companies, and we'll talk about that in just a second. But if you ask them, they would say, gee, things are still really bad. I think they would be surprised at the first 6 months of the year that the market has rallied back from what was, perhaps they're just thinking of their year-end statements, which were so jarring if you compared them to where we started 2022. But perhaps it's the media as well as just maybe a lag in just market performance that is weighing on the minds of those people surveyed here.
But could, because they don't control for political affiliation or viewership. I tend to think it's mostly what you watch, right, and what you want to believe.
And what does the media want to put out there? Everything's fine. Things are, a market is, just waning back and forth. They need to grab some headlines as well. So the only other piece that I point out here is that 35% of people said they were worse off. The way this piece is written is just very negative, and to me, I don't think that's entirely fair because, to your point, Mark, we're still in a very strong labor market and people are still getting out there and spending those dollars. We haven't really seen a waning appetite on that side of things. Switching gears a bit here, mega firms like Nvidia, are they growing to get too big? One of the things that continues to blow me away, Mark, and it's been like this for a while, but interested to hear your thoughts on it. The S&P 500 is an index that many investors track, and perhaps for lay investors out there, they've been told by Buffett or other people that the easiest way to invest is just to buy that benchmark, SPY. There's many options out there. If you look in those ETFs or those funds, Google, Nvidia, Apple, Microsoft, and Amazon make up about 25% in terms of weighting of the S&P 500. So you have about 5 companies making up a quarter of the S&P 500. And year to date, the 10 largest members have gained 44%. If you had stripped those 10 companies out of the S&P 500, the S&P 500 would actually be down slightly this year rather than up close to 10%, like I mentioned. Do you ever get concerned, Mark, just because so many investors do monitor or perhaps passively invest in the S&P 500 benchmark, that there could be too much weighting placed on these 4 or 5 major companies?
I don't.
No?
Some people do, but they're generally self-interested active managers who level the usual criticisms against market cap-weighted benchmarks. And by that I mean something like the S&P 500, just to sort of clarify for people that may not do this all the time. Just to clarify, when you buy something like an S&P 500 index, you're buying a group of companies that are weighted more or less. S&P is maybe not the best example because it's slightly actively managed, but more or less weighted based on their size. So as investors put more money into a company like Apple, which is nearly 8% of the index, it grows and it becomes a bigger percentage of the index. So there's this self-fulfilling nature to price appreciation and representation in the index that feeds back into price appreciation as people buy more shares of an index fund. So in theory, that's problematic, but in practice, it's practically speaking, it is an acknowledgement that you don't know who the winners are going to be, either sectors or companies. And the best way to participate in the economic growth that stocks impart through companies' earnings growing along with the economy is to buy an index fund. Buffett is almost, and many, many others, he didn't invent the idea, but he's probably the most prominent popularizer of the idea, almost certainly right that most individuals should, and do indeed today, if you look at 401k plan allocations, et cetera, should invest in broader markets with a core allocation to an index fund. I just wonder, small and mid-cap funds out there, from a valuation standpoint, I think you had mentioned that they're trading, historically speaking, at a more fair valuation. If just so many people are piling into index funds that largely track the S&P 500, if perhaps you see a suffering in the small and mid-cap space just because so much capital is gravitating towards those larger companies. And in this article, they're sort of mentioning this idea with AI, for example, and you had spoken about this, that it seems like the focus is just on these larger companies. That's where all the dollars are being piled in, and that's why you see Nvidia reaching $1 trillion of a market cap. I guess it's an easy and obvious way to play the theme if you think that AI is going to transform tech and the economy more generally. But to your point, it's not necessarily, perhaps there'll be some winners out of this, but it's still so early to say what AI. Yeah, if you think about the early days of the the internet that you were going to mention. Yeah, exactly. It was hard to say. Amazon, Microsoft are the obvious ones, but there are plenty, a litany. The history of that period is littered with failures. Right. And they weren't stupid. They weren't foolish. They just didn't make it. Some of them due to chance. Some of them due to conditions that were hard to forecast in advance. So because you don't know who the winners are going to be. Same thing will happen likely with AI. It's really important to point out there'll be some winners and there'll be many losers along the way here. We're going to take a quick break here on the Financial Exchange, but when we come back, we're going to have Wall Street Watch as well as Ask Todd. That's right after this break.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Creating the right estate plan to help secure your future takes effort. There are plenty of mistakes that you can make, any one of which could have a dramatic and damaging effect on your financial strategy. Cushing & Dolan are experts in estate planning. Their brand new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn about these critical errors so that you can make the right decisions to always protect your assets. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Cushing & Dolan's new guide will help you address issues like this, so call right now, 866-848-5699, and ask for your free guide today. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Financial literacy is power. The more you know, the better you are at managing your money. In observance of National Financial Literacy Month, consider a credit union as your educational resource. Did you know we offer classes and guidance on money management? From establishing credit to buying a new home or saving for retirement, your financial well-being is at the heart of every credit union.
Learn more about credit unions at bettervaluesbetterbanking.com.
More than 80 million Americans depend on AM radio for their news, weather, sports, and a community connection. It's the backbone of the emergency alert system. It's critical that we keep AM radio in cars because when cell and internet services are down, this free emergency service could be your only lifeline. Text AM to 52886 and tell Congress we need AM radio in cars.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier. With no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your beneficiaries to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
Yeah, it sure would. And again, sometimes simple is not always better. And that's what I want to focus on here, folks, is it seems easy to throw an account name, like say I've got a child living nearby, I add their name to my account because it's convenient, but I've got 3 other kids or 2 other kids. Well, when I die, that asset will go directly to that joint owner. Yes, it will avoid probate, but at the end of the day, I could be disinheriting my other children by accident. I certainly don't want to do that. I also expose that asset, at least 50% of that asset, to my child's creditors while I'm living. I don't think I want to do that. And especially, folks, when it comes to real estate, don't add a child's name to your real estate deed, because that not only exposes it to the child's creditors and future divorces, but at the end of the day, you've also given away half the house, trapping half the capital gain in that property. Again, in essence, giving your child a tax bill when you give away highly appreciated property. So do an entire estate plan. Don't just make quick knee-jerk reactions.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. You can request this brand new guide by calling 866-848-5699, or you can request it from LegalExchangeShow.com. Once again, the phone number, 866-848-5699, or you can simply request it online at their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. St. Croix, St. Thomas, and St. John were named the best Caribbean islands to visit for 2023 by the Caribbean Journal. So act now and fall naturally in rhythm with the heartbeat of the islands as you enjoy some of the most pristine beaches in the world along with world-class culinary cuisine. Visit usvi.com right now and book your next vacation today. That's visitusvi.com. Well, markets selling off a little bit today as investors await results from today's debt ceiling bill House vote. I think that's later today. And also react to this morning's latest jobs opening data, which came in higher than expected. At the moment, the Dow is off by 291 points, nearly 1%. S&P 500 is off over 0.75% or 36 points. And the NASDAQ also off by 0.75% or 95 points. Russell 2000 is down over 1% at the moment. 10-year Treasury yield, that is off by 3 basis points at 3.66%, and crude oil down 1.33%, trading at $68.55 a barrel. American Airlines increased its second quarter profit outlook, citing continued strong travel demand and lower fuel prices. The company said its adjusted earnings will come in a range between $1.45 and $1.65 per share, above previous forecasts of $1.20 and $1.40. American also said it's now anticipating its unit revenues in the current quarter to come in 1% to 3% lower, also better than previous estimates of a 4% decline. That stock up by 0.75%. Meanwhile, shares in HP are down by 2.5%. After the PC maker posted mixed quarterly results and issued soft near-term sales guidance. The company's adjusted earnings of 52 cents per share beat forecasts of 48 cents per share. However, HP generated $6.97 billion in revenue, below estimates of $7.31 billion. Elsewhere, shares in Advance Auto Parts are down 32% after the retailer posted a big earnings miss for the first quarter, where adjusted earnings came in at 72 cents, well off of forecasts of $2.57 per share. The company also cut its quarterly dividend. And all eyes will turn to Salesforce after the closing bell today, where the cloud and software firm will unveil their first quarter results. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutzke is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutzke.
As promised, it is now time for Ask Todd, where you, the listener, can call into the studio and have any and all of your estate planning question answered by Todd Lutzke. If you want to give us a call, you can reach us at 888-205-2263. Again, that's 888-205-2263 to have any and all of your estate planning questions answered by Mr. Todd Lutzke. Todd, how are we doing today?
I'm never better, and you?
I'm doing all right. I've licked my wounds from the Celtics loss. We're moving on, and we're just going to enjoy the beautiful May weather that we're having here. Question for you, Todd, regarding wills. Oftentimes when you talk with clients out there, they're very focused on, do I have a will in place? Do I need to make changes to my will? What is your viewpoint on the will and sort of where it stands in terms of a general estate plan? Does it cover all the bases, or is there more work that's necessary to be done for most folks out there?
I think if you're starting with the idea of just having a will, I like to tell people that it's a won't, right? A will is really a won't. Well, why would I say that? Well, think about what your objectives might be when you're doing your estate plan, right? First of all, do you want to avoid probate? Well, the answer generally is yes. Mm-hmm. A will won't do that. In fact, remember, a will goes to probate. It's the only item, the only estate planning document in your toolbox that actually has to be filed with the court. So that's going to probate. What is probate? Probate is items that you die owning in your own name. If they're in your name, they're going to go to probate unless they're in your name alone is really the answer. So a will won't avoid probate. Number two, I don't want to pay death taxes. Mostly clients don't want to pay either estate taxes at the state level, which check with your state, or more importantly, the federal level. Again, that number is a moving target, as we know, but right now it's pretty high, so that might not be the biggest issue. But we certainly don't want to pay taxes, and I can tell you a will won't do that. Starting to get the flavor that a will's a won't.
I hear you.
Well, there's more, though. What about if I want to protect assets from the cost of nursing home care? That might be another general question that clients have. So if I want to do that and I only have my assets in a will, it won't. do that either. So a will is really a won't. I think the only thing the will really does for you is it directs where your assets go when you die if you haven't directed them some other way.
Sure.
Which I think you should do. And even controlling assets from the grave, a will really won't do that. Mostly the will just distributes assets out. Could you have a trust built in the will? I suppose you could. But that doesn't really help you the same way as a separate trust would. So a will's really a won't. I think you need to do a lot more than that.
Sure thing. We're talking here with Todd Lutzke from Cushing & Dolan. If you want Todd to answer any of your estate planning questions, give us a call on our studio line, 888-205-2263. Again, that number to call in to ask Todd any of your estate planning questions, 888-205-2263. We are going to take a quick break here, but when we come back, we'll be answering all of your calls to speaking with Todd Lutzke from Cushing & Dolan. That's right after this break.
Ask Todd with Todd Lutzke every Wednesday at 10:30, only here on the Financial Exchange Radio Network. Creating the right estate plan to help secure your future takes effort. There are plenty of mistakes that you can make, any one of which could have a dramatic and damaging effect on your financial strategy. Cushing & Dolan are experts in estate planning, and today is the last day to get their new guide called Detour Ahead, Estate Planning Potholes to Avoid. In it, you'll learn about these critical errors so that you can make the right decisions to always protect your assets. As an example, if you've got an existing trust that hasn't been updated in the last several years, you're setting yourself up for problems. Cushing & Dolan's new guide will help you address issues like this, and today is the last day that you can get it. So call right now, 866-848-5699, and ask for your free guide today. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier, with no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
Tuning into the baseball game, monitoring the incoming storm, catching your favorite talk show. These are just a few of the reasons more than 80 million Americans depend on AM radio each month. And did you know AM radio is the backbone of the emergency alert system? It's reliable, free, and public safety depends on it. Text AM to 52886 and tell Congress we need AM radio in cars.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
You're listening to Ask Todd with Todd Lutzke on the Financial Exchange Radio Network.
We are back here with Todd Lutzke from Cushing & Dolan answering all of your estate planning questions. We're going to jump right into the calls here. Our first call is from Jim in Chatham. Jim, you are on with Todd Lutzke.
Hi, Todd. This is Jim here in Chatham. My question concerns Massachusetts estate tax.
Mm-hmm.
I'm a Florida resident for 6.5 months a year, and up here the other 5 months, 5.5.
Mm-hmm.
My estate attorney tells me to avoid Massachusetts estate taxes on the value of the house. I'd be best to put it into an LLC, and I wanted to just run that by you and see how does that work. I understand that because the real estate's here in Massachusetts, they can tax that, when I die.
How much is the house in Chatham worth?
Probably $2 million.
And the size of the overall estate, roughly, if you added up all the assets?
Yeah, I'm into low 8 figures.
Okay, so what they're going to end up doing is they're going to take first and foremost, in Massachusetts, folks, for everybody out there, if you move out of state to avoid the estate tax, certainly okay to do that, and you own Massachusetts property, then that Massachusetts property must be placed in an LLC. Otherwise, even as a non-resident, Massachusetts will tax you on the value of the property in Massachusetts. Now, example, if the value is $2 million and your total estate, if the value of the Mass property is $2 million and your total estate is $6 million, then they're going to take $2 million, divide by $6 million, get a percentage, and then that percentage will be multiplied by the tax on $6 million in Massachusetts. So they tax you as a percentage of the whole. So your Mass property is taxed as a percentage of your entire estate. So whoever told you to put it in an LLC, Jim, it is the right thing to do. Understand, once it goes in an LLC, if it was your primary residence, it is no longer your primary residence immediately. You will not get your capital gains tax exclusion when you go to sell that property, but that's okay because you're trying to show Massachusetts that you're not a resident. So putting it in there, certainly confirms that that's not your primary residence. I certainly think it's worth doing, especially with a $2 million size of your property here in Mass. So hopefully that was helpful, folks, and that is very important. And you know what? The guide we're giving away, and it is, by the way, the last chance to get it, is the end of the month, folks. So last chance to get it. Potholes in your estate planning, right? Detour ahead, potholes to avoid when you're doing your estate plan. This would be one of them. Somebody who's already got their estate planning done, revisit your estate plan. Not a bad idea. When you revisit it, you will find something like this where, I've moved, so maybe I should revisit my estate plan. And now that I've moved, not only do I need to update my estate planning documents, but maybe I need to look at how it affects Massachusetts, where I used to live. So all kinds of reasons, folks. Second marriages, you lose a spouse. There's always reasons to revisit your existing estate plan. And if you've not done your planning, please get this guide because it will arm you with what to look out for when doing your planning. So 866-848-5699 or go to my website, legalexchangeshow.com. You can download it right there. Folks, it is the end of the month. Last chance to get it. 866-848-5699 or my website, legalexchangeshow.com.
We're going to go to our second caller here with Ask Todd. This is going to be Greg in Boston. Greg, you're on with Todd Lutzke.
Thanks for the program, guys. Todd,
ran into a situation where the spouse, we had a mutual financial planner. The spouse was able to go in and change all the beneficiaries without notification to the husband, and then subsequently passes away.
Designated beneficiaries on what? On IRAs, on brokerage accounts, what?
All three. Well, both of them.
Okay. Go ahead.
Is there liability on the broker, the financial planner who did not inform the unknown spouse? And if so, what actions can be taken?
So definitely a tough situation. So if they were married, I don't know, if you're listed on the account, this is really going to be a function of looking at, the brokerage house and their operating, agreements that they work under. So if the account is jointly owned, well, it may be that either party can change the designated beneficiary. So I don't know that. If it required both signatures to change the designated beneficiary on the joint account, then yeah, I guess there could be some kind of an action that you might want to bring against the brokerage house. Just don't know. Now, from an IRA perspective, those are individually owned. As I understand it, an IRA beneficiary can only be changed by the owner of the IRA, the participant of that IRA. So if that was the now deceased person, and they never actually signed to change it, I would say that's probably just an invalid change, and it would maybe just be ineffective. Whether you have to bring a lawsuit or not, I think it would just be an ineffective change, and it would be like as if it never happened. But again, I don't have the exact answers on something like that. But definitely, folks, that's something to be careful about, especially if you're getting a divorce. I don't know if that's what's going on here. Always be careful and make sure you change your beneficiaries on your own right after the divorce so that you can not have something like this happen. So I'm not sure that was helpful, but I hope it was.
Todd, how often do you feel that you should be reviewing trust work that you've done? Is that something that's an annual process, or how often do you tell people to kind of review what work they've done?
Yeah, I think it's a great idea. So let's take these examples right here, right? The two callers that we had, I think, are perfect examples of something like this. So I'm not sure I quite understood the second one where they're getting I don't know if there was a divorce there or the spouse just changed it and then somehow the person died that they changed it on. But number one, if you're getting a divorce, please, go out, make changes. If you can change before the divorce, which I don't know, if it hasn't filed yet, I guess you still can move assets, but you got to be careful if you're doing it in reaction or in conjunction with a divorce. May or may not be effective, but certainly after the divorce, you're a single person.
Mm-hmm.
So if you're a single person, you really need to do your plan as a single person.
Right.
And you need to step back and say, all right, not only do I want to change my beneficiary so the Greg situation doesn't occur, I put on there who I want to be my beneficiary, but you need to now rethink your will, your trust. I'm older now, perhaps. Maybe I want to switch, maybe I want to make sure I have a revocable trust in place for my family and to ensure it goes to my family and not my ex-spouse. So that would be a reason. Take the Jim call. I moved out of state. Well, that's a great reason to change your plan. Now, when you move out of state, your trust may still be okay, but you should change your basic documents, your will, your healthcare proxy, your power of attorney, your HIPAA form. These are state-driven, and they're less expensive to change, but you should change them to reflect the state that you're in. And in addition, it helps you show your intent to be a resident of that state.
Sure.
I didn't just move. I've now changed my voter registration and my estate planning documents. So that would be a reason. What if I lose a spouse? Well, I'm single again for a different reason. Now I need to revisit my estate plan and figure out how to leave it. What if I get remarried? Well, that happens all the time, right? So if you get remarried, you want to make sure that it goes the way you want it to go to protect your side of the family and your current spouse. So lots of reasons, folks. Get the guide. It's the last chance. 866-848-5699 or legalexchangeshow.com.
Todd, thank you so much for the time today. We appreciate it.
The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing & Armstrong do not endorse each other and are not affiliated. This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutzke has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. Creating the right estate plan to help secure your future takes effort. There are plenty of mistakes that you can make, any one of which could have a dramatic and damaging effect on your financial strategy. Cushing & Dolan are experts in estate planning. Their brand new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn about these critical errors so that you can make the right decisions to always protect your assets. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Cushing & Dolan's new guide will help you address issues like this, so call right now, 866-848-5699, and ask for your free guide today. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. That's LegalExchangeShow.com.
As we take a look at markets, they've been open for about an hour and a half, and we are down across the board with the Dow Jones off 280 points or 0.85%. The S&P 500 is off 0.75%. The NASDAQ is over 0.5% down as well. We're going to take a break here on the Financial Exchange. When we come back in the second hour, we're going to be talking about the housing market as well as some Fed commentary on future interest rate hikes. Stick with us here for the second hour of the Financial Exchange right after this break.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled How to Retire in 2023. Mike, what happens if you go through this process and you find out, gee, maybe the numbers don't add up to the kind of retirement that I wanted this year?
Yeah, so, I mean, first and foremost, make sure you do the numbers, right? Don't just base it on a rule of thumb. Make sure you've run the budget and understand where your spending is going to be. But if you do those numbers and you say, it looks to me like I'm on the edge, there are a few different ways to change things, right? I mean, one, if you're still not quite there, you could save more for retirement by working longer. You could take a look at your spending, obviously, right? If you can decrease your spending, that goes a long way because we're talking about a retirement in this country oftentimes lasting 20, 30 years, and that spending compounds.
The other thing you can consider, something like a part-time job or a phased-in retirement where you reduce your hours gradually over a couple of years.
That's one that people, I feel like, don't pay close attention to, but one that's become incredibly popular these days is, retirement to me does not necessarily mean what it meant to my parents. And yeah, I can't really see myself fully stopping work. Maybe I am working 20 hours or working as a consultant in some industry.
Our guide this month is titled How to Retire in 2023, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by calling ArmstrongAdvisory.com. Again, the guide is titled How to Retire in 2023, and you can call 800-393-4001 or visit ArmstrongAdvisory.com to request it.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Tuning into the baseball game, monitoring the incoming storm, catching your favorite talk show. These are just a few of the reasons more than 80 million Americans depend on AM radio each month. And did you know AM radio is the backbone of the emergency alert system? It's reliable, free, and public safety depends on it. Text AM to 52886 and tell Congress we need AM radio in cars.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
Proper estate planning is critical and may be the difference between retiring comfortably or living under incredible financial pressure. Cushing & Dolan can help. Call them today at 866-848-5699 and ask for their new guide called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk. That's 866-848-5699 or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier, with no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
I studied Spanish in college and never got fluent, but then I tried Babbel.
Want the most effective way to learn another language? In just 15 minutes a day, Babbel's bite-sized lessons will have you learning another language in as little as 3 weeks.
Babbel is all conversation-based, so it gets you speaking quickly about things you actually talk about in the real world.
You'll really see a difference in how you can speak and how conversational you can be in just a few weeks.
Babbel isn't just lessons. You can listen to podcasts, play games, watch videos. You can even take live online classes with a language teacher. There are so many ways to learn with Babbel.
The lessons online and in the app make it easy to learn from pretty much anywhere.
University studies have shown that using Babbel for 15 hours is equivalent to a semester of college Spanish. If you want to learn a new language, there's no better way than Babbel. Go to Babbel.com to try for free. That's Babbel.com. Babbel.com.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutzke with Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about the top estate planning mistakes to avoid. Now, Todd, in your opinion, what is the absolute biggest mistake a person can make when it comes to estate planning?
Well, they think about giving away their house. They always feel good, and they say, you know what, I'm going to give away my house, or I'm going to make a gift of a vacation home, or I'm going to, just get it out of my name. That way the kids have it, they enjoy it, and I don't own it anymore. And it seems so easy and so inexpensive. But folks, when I say it's one of the biggest mistakes, generally when you give away highly appreciated assets, which is generally what you have with an old house that you bought or an old vacation home that you've had for many years, you give your children the capital gains tax headache associated with it. You give them a carryover basis, so you're giving them a tax bill. In addition to giving them the tax bill because of the built-in gain, you're exposing it to all their creditors, their future divorces. This might not be the safest way to leave the asset to the family. So please don't make that mistake. Instead, think about your plan overall and put together an entire estate plan using trusts. You'll be much happier, and the family will be much happier and enjoy less taxes.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. You can request this brand new guide by simply calling 866 848-5699, or you can simply request it at legalexchangeshow.com. Once again, the number 866-848-5699, or you can request it at their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by taking part in this year's DAV 5K. For more information, visit dav5k.boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Welcome to the second hour of the Financial Exchange. Paul Lane, Marc Fandetti, and Tucker Silva working the boards with you. Markets are open and they are down across the board. Dow Jones off over 200 points and the S&P 500 off almost a full percent. The NASDAQ is down about 100 points as well. We kick off the second hour of the show diving into some housing data that we got out this morning. For a long period of time since last June, housing prices had been decreasing as likely buyers were sort of recovering on the interest rate hikes that they've seen in terms of the impact on their 30-year fixed mortgages. However, Mark, we got some data out today in which home prices rose in March for the second straight month. Largely, it seems due to just a very dismal market in terms of housing inventory out there. It continues to be a problem.
Surprised the heck out of me. I would have thought with mortgage rates doubling and given the spectacular increases we saw in home prices starting at the end of the COVID recession, they're still up nearly 40%. I'm exaggerating a little bit. It's more like 36, but they were up at one point over 40%, which is a few times the historical rate of growth over such a short period. I would have thought, I think anybody who looks at a long trend sees the trend broken and a dramatic change in the slope. And, well, geez, this has got to come down to earth. Financial gravity has to kick in. It really hasn't. Prices have pulled back, as you suggested, a little bit. But over the past few months, by many measures, including the Case-Shiller, which you're talking about now, they appear to be bouncing back.
Incredible, because if you look just a year ago, the 30-year fixed mortgage rate was about 5.1%. Today, as of May 25th, it closed around 6.6%. So the fact that you could have rates that are almost double what they were not a year ago, but if you go probably back 2 years ago, and still have home prices increasing off of what, to Mark's point, what was a tremendous amount of growth in a very compressed period of time, to me is just incredible. And I see it here in this New England region just anecdotally as well, where open houses, there's still a tremendous amount of demand, and there seems to be these bidding wars continuing. And to me, it just, all I can think of is it's got to be the inventory issue, that there are just so few homes that are being listed out there that this market, because there are buyers who are wealthy enough to make offers and are just looking for a very seldom, homes to pick through, you get these bidding wars and you get the increase in prices. It does seem like some regions of the country have backed off a little bit. Some of the western markets, such as Seattle, as well as Phoenix, those were the ones that saw the most price growth out of the pandemic. They have calmed down a little bit, where those prices were down about 0.9% in Seattle and about 0.5% in Phoenix. But other areas like Florida continues to see tremendous amount of annual home price growth. Miami up at over about 8% year over year. That was the fastest, then followed by Tampa at 5%. And I've heard that from folks that looking to buy a home in that Tampa area is just extremely competitive. A lot of people migrating down there to move, it seems like. And perhaps that's as a result of maybe some of the tax changes here or just the beautiful weather that it offers. But regardless of how you look at it, still a very hot housing market.
If this isn't going to help anybody who's curious about the future direction, I don't think, of home prices. In fact, this may not interest many people at all. But what amazes me is if you look at the price of homes, I'm not going to compare it to other assets like the S&P 500 and stuff because it's distinct. It's physical. It has utility. Some might disagree with not wanting to compare real assets to financial assets, but I'm just going to put all the financial market stuff to the side and say that over the same period that home prices have increased by 40%, the GDP, the real GDP, so adjusted for inflation, this is the value of all the stuff that we produce as Americans, is up about 6.5%. Okay, over the same, this is cumulative now, over the same period. Homes are up 40, GDP's up 6, real disposable personal income is up under 3%, again, cumulative, total. The population growth should be a factor in home prices. If you're going to do a model of home prices, you might say, well, it's a factor of, it's driven, that is, by population growth, by disposable income. That's why I pulled these particular series. This is very unscientific, and you can find your own favorites. Productivity over the same period. Well, maybe people have just started producing a lot more with the same amount of inputs, and
the robots have finally taken over.
That would help the productivity of people who keep their jobs and don't get enslaved by the robots in Paul's future. Productivity's up under 4%. I'm sorry, I should have led with that and not carried on. But anyway, so by any measure, home prices are in the stratosphere relative to other measures of real economic progress, for lack of a better way.
And correct me if I'm wrong, the trend on home prices, if you look back 100 years, is it typically keeps pace with inflation or between 2 to 3%? Is that the long-term trend with home prices?
I could do it with a little bit more time, but slightly above, not much the rate of inflation, so very little real growth from home prices. So maybe we've seen. Go ahead. You were going to make a point.
No, but I just think about that. Let's say it's 3. We don't have to be exact.
That's safe. Yeah. Oh, you want the rate of growth?
No, we don't have to get the exact number. 3% versus 40%.
No, Paul, I want to do this for you.
Mark,
I want to do
please.
this for you. I never do anything for you.
40% in a 3-year period versus a 3% historical average we'll use as a rough framework is just it just blows my mind.
Now,
and
it's high. It's a lot higher than 3 over the past 20 years.
Right.
It's more like double that, but yeah.
It's just incredible, and it just, for first-time home buyers, you really feel for them because it's just such a competitive market. It continues to be, and I was under the impression with the higher rates that we'd see a little bit of relief there. There is an initiative that is being taken place to help some of those borrowers who are having trouble getting back on track and don't want to lose their super low interest rates. We've seen a bit of an uptick on delinquencies on mortgages from about 2.25% to about 2.4% year over year as of April. And so what the FHA is doing, they're proposing a plan where borrowers could basically get a subsidy for a portion of their mortgage payment and not be forced to refinance at the higher rates. I don't know really how I feel about this. You have all the opportunities in the world, I feel like, to get sort of ahead of your payments and take advantage of these lower rates. I'm surprised that they're taking this initiative, Mark, to help where the delinquency level to me isn't overly concerning.
I'm sorry, I'm still working on the math
okay,
problem you just gave me.
What do we got with the math problem?
Is this? I'm not there yet, Paul. Jeez. I mean, I get the motivation, but you're asking someone to tack on years, effectively, worth of debt repayments, right? Like, your payment's not going to go up because we're holding the proposal, as I understand it, is payments don't go up because interest rates, you get your old interest rate.
You continue to be at that 3% rate, let's say.
Okay, and this is meant for people who are struggling to make their payment as it is,
It will
right?
certainly be targeted to low-income families out there that are struggling to make payments where basically for a $800 principal and interest payment, the FHA, easy for me to say, will subsidize $200 to $300 of that payment, but they're subsidizing it not to just cover you. They're basically partitioning it out to be a secondary loan that's to be repaid at a later date to kind of get you back on track. But that doesn't always solve the problem that there is going to be a second loan outstanding. It's just a temporary relief, and I'm just not sure it's so necessary with these rates of delinquency and coming off of a period of time when the saving rate was so high in this country.
I mean, as cruel as it sounds, modifying mortgages is a noble policy. It's meant to keep people in their homes, but it also restricts supply. This was the problem in the early 2010s when mortgage mods became popular, for lack of a better word. They may have existed before then, but they certainly weren't as widely used, or at least not publicized. So you're going to keep people who otherwise wouldn't be able to afford it in their homes, which restricts supply. I don't know how I feel about that. Is it cruel for me to think, well, if you can't afford it, it's going to be disruptive in the short term. Let's make sure there's good, affordable apartments available for these folks, but don't necessarily keep them in a house they can't afford? Or should the goal be, I don't know how I feel about this. Should the goal be to keep them in their homes? It's better for the kids. We don't want them disrupted and in the same school and all that.
Maybe that sounds cruel, but I tend to be on the just have affordable apartments as an option that you kind of got to stick to.
We're not going to throw you out of shelter,
right?
But you can't stay in the house because you can't afford it.
Yeah. It
seems to me that's not a choice we're willing
luckily
to make.
A problem that you and I don't have to tackle, but it's not an easy solution to find. But I tend to be, I guess, on the little crueler side of things, that you got to stick by the deal that you have in place. We're going to take a break here on the Financial Exchange. When we come back, we'll have Ted Rossman from Bankrate.com talking about vacation inflation. Also, I'm sure Mark will be crunching that mathematical problem. But right now, it's time for a salute to our soldiers.
Salute to Our Veterans is proudly presented by VA New England Healthcare. Today we honor U.S. Navy veteran Dana Castanetto. Dana served for over 25 years in engineering and logistics on both active duty and the reserves, with deployments all around the world. Thank you for your service, Dana. If you or a loved one serve this country, get the health benefits you earned and deserve. Call 844-VA-CARES. That's 844-VA-CARES.
Business and financial news affecting the markets and your wallet. We've got it all, straight from Wall Street, right here on the Financial Exchange Radio Network. The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier. With no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
AM radio provides always-on news, sports, talk, traffic, and weather reports. And it's also a vital service that provides important emergency information when your community needs it most. Tell Congress you need AM radio to stay in your car. Because when cell phones and the internet are down, this free emergency service is critical. Text AM to 52886 and tell Congress we need AM radio in cars.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your beneficiaries to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
Yeah, it sure would. And again, sometimes simple is not always better. And that's what I want to focus on here, folks, is it seems easy to throw an account name, like say I've got a child living nearby, I add their name to my account because it's convenient, but I've got 3 other kids or 2 other kids. Well, when I die, that asset will go directly to that joint owner. Yes, it will avoid probate, but at the end of the day, I could be disinheriting my other children by accident. I certainly don't want to do that. I also expose that asset, at least 50% of that asset, to my child's creditors while I'm living. I don't think I want to do that. And especially, folks, when it comes to real estate, don't add a child's name to your real estate deed, because that not only exposes it to the child's creditors and future divorces, but at the end of the day, you've also given away half the house, trapping half the capital gain in that property. Again, in essence, giving your child a tax bill when you give away highly appreciated property. So do an entire estate plan. Don't just make quick knee-jerk reactions.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. You can request this brand new guide by calling 866-848-5699, or you can request it from LegalExchangeShow.com. Once again, the phone number, 866-848-5699, or you can simply request it online at their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. For your chance to win our daily trivia contest, text us at 617-362-1385 and use keyword ENCORE. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
We are now joined by Ted Rossman from Bankrate.com. As we head into the month of June here, the summer is ramping up and vacations are abound over the next couple of months. So, Ted, it seems as if there's a lot of inflationary pressure that has perhaps subsided a bit, but some of these prices on both airfare and hotels continue to be high. What are you seeing out there?
Yeah, I think that's a key point. Even though inflation has started to come down and level off, we're building off that higher base, and I think that's really significant for travel. For example, airline fares fell about 1% over the past year, according to the latest Consumer Price Index, but they jumped 33% the year before that. So people are hardly noticing the price drop. These fares are much higher than they were 2 years ago. It's a similar story for hotels. Those prices are up about 24% over the past 2 years. Dining out costs about 16% more than it did 2 years ago. So I think that's a key point for travel and also for other things, too. Lower inflation doesn't mean we're rolling back the clock. It just means that we're growing prices at a slower rate.
Do you have any suggestions, Ted, for people who may be looking to book, whether it be summer travel or a trip for the fall, on ways that they can save on that upcoming vacation?
One great idea is to use your rewards points and miles. We found only about 1 in 5 summer vacationers are doing so. You may be sitting on a stockpile of credit card points, frequent flyer miles, hotel points. Put those to work. I also like the idea of letting the deal dictate the destination. I think so often people plan travel the other way around, and they get their heart set on a specific place at a specific time, and that just kind of boxes you in and makes it harder to save. So if you can be open-minded about where and when you go, that can help a lot. Also, maybe going in the shoulder season or the off-season or flying midweek instead of on the weekend. These are all some ways that you can save.
In terms of the surveys that you guys have done, Ted, have you seen that this has had an impact on consumers out there? Have they begun to be stressed by the costs associated with booking these types of trips?
We found that 80% of likely summer vacationers are making changes because of inflation. But what I thought was really interesting was that even more people are projected to travel this summer than last. So I think the main message is people want to go somewhere. They're willing to cut some corners to save money, but they don't want to abandon the trip entirely. So what we see most often are things like maybe picking cheaper accommodations or cheaper activities or cheaper destinations or maybe driving instead of flying. But people still want to go on this trip. There's still a lot of pent-up demand. people are prioritizing experiences over other types of spending.
We've certainly had, there was plenty of time to tune up your yard and the house. It's time to hit the open road and get some vacation travel in. That's Ted Rossman from bankrate.com talking about vacation inflation. Ted, thanks so much for the time today. I really appreciate it.
No problem. Thanks for having me.
All right, time for trivia here on the Financial Exchange, and it's brought to you by Encore Boston Harbor. Visit EncoreBostonHarbor.com and see for yourself why Encore is a Forbes 5-star award winner for both hotel and spa. Well, on this date in 2014, Gangnam Style hit 2 billion views on YouTube. It was the first video in YouTube history to pass the 2 billion views mark. 6 of the top 10 videos on YouTube are kid songs, however. Trivia question today, what is the most viewed video in YouTube history? Once again, what is the most viewed video in YouTube history? Be the third person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Encore Boston Harbor. Be sure to include the keyword Encore in your text, and we'll give away that Encore gift card on Friday's show. 617-362-1385, and the third correct response will be our winner today. See complete contest rules at financialexchangeshow.com.
Another trivia question I know the answer to. I'm just really on a good roll with those.
That's easy. It was a Financial Exchange YouTube video.
Financial Exchange on YouTube.
That's when Chuck won the hot dog eating contest, right? That had millions of views.
Billions of views. Former Treasury Secretary Lawrence Summers says he sees U.S. interest rates headed higher in the short run. Mark, we talked about this a little bit in the first hour. We've got inflation running between 4.5% to 5%. Over the last 14 months or so, the Fed has raised the central bank interest rate to about 5%. We were sort of speculating that likely there's more work to be done there to get inflation under control. And it seemed like Lawrence Summers is agreeing here that perhaps another 25 to 50 basis points is going to be necessary over the next 3 to 6 months.
Yeah, I think the model he's following, and when a researcher or an economist, he's a famous economist, he teaches at Harvard, he was head of the Department of he was Treasury Secretary under Clinton and undersecretary before that. He was president of, just a litany of accolades and impressive positions throughout his career. He was in the Reagan administration, believe it or not.
Wow.
Larry Summers was once considered, he was on the Council of Economic Advisors. I know this fact because it's something I think I read recently. Anyway, so he's someone who used to be known as a conservative economist, and then he started advising Democrats, and he's a real power player. And he was very vocal, as you know. I set it up that way because when he talks, is my point, people listen.
Sure.
And he was very vocal about the dangers of inflation early on with the multiple rounds of stimulus being stuffed into a supply-constrained economy, and he was right. And he doesn't just shoot from the hip. Good researchers shouldn't. They follow a model, and I think the model he's following here is something like and then we talked about this at the beginning of the show. We talk about this a lot internally. The real Fed funds rate. The Fed funds rate, the thing that the Fed targets, it's at 5% now. It'll probably go up to 5.25 in a couple of weeks when the Fed meets again. That rate, when you take away expected inflation, gives you the real rate. That's probably still too low.
Right.
Which, if it doesn't put upward pressure on inflation, and I don't see inflation accelerating, so maybe it is not putting upward pressure on prices, but it's probably not enough to get it over that hump that we talked about earlier, Paul, that you talked about, specifically getting inflation from 4 to 2 being hard, maybe harder than getting it from 8 to 4 when that 8 was due to some special factors, supply shocks, and stuff like that. So I think that's the type of model he has in mind. He's not just shooting from the hip. Mm-hmm. He's not motivated by some ulterior agenda. He's just applying a model that's been successful at predicting inflation, and this is where you land if you look at this through that type of framework. Others with a different framework may disagree, but we probably think he's right.
I want to talk a little bit more about some other comments that Lawrence Summers had in his recent press conference here, but we're going to take a quick break here on the Financial Exchange. We'll be right back with the U.S. taxes right after this.
The Financial Exchange is live on Facebook, so make sure to like our page and watch the guys break down the latest on the markets every day beginning at 10 on the Financial Exchange Radio Network.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
AM radio provides always-on news, sports, talk, traffic, and weather reports. And it's also a vital service that provides important emergency information when your community needs it most. Tell Congress you need AM radio to stay in your car. Because when cell phones and the internet are down, this free emergency service is critical. Text AM to 52886 and tell Congress we need AM radio in cars.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Proper estate planning is critical to you being able to enjoy your retirement years, and may be the difference between retiring comfortably and living under incredible financial pressure. Creating an estate plan can be a difficult process if you aren't working with an expert who will make sure that your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and they have a new guide out this month called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may help you correct an issue that could come back to bite you in the years to come. Call right now, 866-848-5699, and get your free guide today. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier. With no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your beneficiaries to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
Yeah, it sure would. And again, sometimes simple is not always better. And that's what I want to focus on here, folks, is it seems easy to throw an account name, like say I've got a child living nearby, I add their name to my account because it's convenient, but I've got 3 other kids or 2 other kids. Well, when I die, that asset will go directly to that joint owner. Yes, it will avoid probate, but at the end of the day, I could be disinheriting my other children by accident. I certainly don't want to do that. I also expose that asset, at least 50% of that asset, to my child's creditors while I'm living. I don't think I want to do that. And especially, folks, when it comes to real estate, don't add a child's name to your real estate deed, because that not only exposes it to the child's creditors and future divorces, but at the end of the day, you've also given away half the house, trapping half the capital gain in that property. Again, in essence, giving your child a tax bill when you give away highly appreciated property. So do an entire estate plan. Don't just make quick knee-jerk reactions.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. You can request this brand new guide by calling 866-848-5699, or you can request it from legalexchangeshow.com. Once again, the phone number, 866-848-5699, or you can simply request it online at their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Miss any of the show? You can catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
The Financial Exchange is proudly partnered with VA New England. If you or a loved one serve this country, get the health benefits you earned and deserve. Call 844-VA-CARES. That's 844-VA-CARES. Trivia question today was simply, what is the most viewed video in YouTube history? That would be Baby Shark. The Baby Shark video is the only clip on YouTube to pass 10 billion views, 9 billion of which is probably my kid. The song was released by Pink Frog, a South Korean entertainment company, in 2016. Winner today was Frank from Manchester, New Hampshire. He's taking home that Financial Exchange Show t-shirt and is also registered to win a $100 gift card to Encore Boston Harbor, which we'll give away on Friday. Trivia is brought to you by Encore Boston Harbor. Visit EncoreBostonHarbor.com and see for yourself why Encore is a Forbes 5-star award winner for both hotel and spa.
Tucker, I know you and I have certainly seen that video. Mark, have you seen Baby Shark? Are you one of the 10 billion? You have not seen it.
No. Apparently, I'm the only human.
No.
You definitely have heard the song.
You've definitely heard it, but it is specific to kids. You just get brainwashed into hearing it over and over.
And no, I will not play it.
Yeah. Do him a favor and not play it.
No, ever.
I mentioned before the break, Lawrence Summers had spoke, the Treasury Secretary, and he was mentioning that interest rates would likely need to go higher, that the Fed has a couple more hikes up its sleeve. It seems plausible. The other piece that he mentioned when he spoke was regarding the U.S. future for its deficit and the potential for U.S. taxes to need to increase in the future. And Mark, when we were going through the budget deficit concerns, clients were reaching out, I looked at the U.S. budget, and just from a very simplistic standpoint, the expenses are somewhere between 6 and 7 trillion on a yearly basis. In terms of what we generate for revenue, it runs anywhere from 4 to 4.5 trillion. So there's that deficit of 1.5 trillion. And if you look at the spending side of things, if you're not going to cut Social Security and you're not going to cut Medicare, and if you're not going to touch defense, all of a sudden 2/3 of your budget is spoken for and is off the table in terms of cuts. So to me, it's hard to mathematically fathom how we are able to shrink that deficit if you're unwilling to touch 3 of the largest components of your budget without the need for potential tax increase in the future.
Or, yes, some acceptance of the fact that entitlements specifically have to be reformed, which both major political parties, as I understand the lay of the land right now, are opposed to. At least the front runner on the Republican side is Trump, who doesn't care about deficits. We know he ran up $8 trillion while president, even though he's criticizing now. So spent recklessly as president. Now the Republican front runner doesn't want to talk about entitlements. He will not be able to do anything about the deficit by definition, as you say. Democrats are wedded to an expansion of the welfare state, and that implies increased deficits unless you do something to raise revenue, as you pointed out. So Summers is right. I would like to see more effort to cut spending, even discretionary spending. But yeah, Social Security is a longer-term problem, and Medicare is a longer-term problem. Premiums have to be increased, and eligibility ages have to be increased. This is going to happen.
Right.
We can debate it now. Politicians can continue to kick the can, and both parties are behaving irresponsibly. The Republicans sound more fiscally responsible to me than Democrats do, but we know they don't mean it.
Right.
As soon as their guy gets in, they're going to, or woman, they're going to want to cut taxes and not cut spending.
Right.
I'd love to see taxes cut, but you got to cut spending. We've learned that. That's the lesson of the past 40 years. It doesn't pay for itself. So I'm not optimistic in the short term. It'll take another crisis, much like the debt ceiling took an impending, though I'm not convinced it was the crisis that some of the hysterics suggested. It took a brush with crisis, even if it was somewhat exaggerated, to get both sides to act and come to an agreement, though we haven't passed anything yet. It'll take a similar brush, I would think, with calamity to get both sides to act.
Yeah, to me, it would seem that the the large day of reckoning would be at some point we're at $31.5 trillion in terms of outstanding debt now, that it would reach a level where it becomes overly concerning from a global economic standpoint. Do you feel that that would be the case?
Theory says if debt grows faster than GDP, so it gets bigger and bigger as a percentage of the economy, becomes unserviceable, it crowds out investing, it crowds out other priorities, that is, other forms of spending, both because primarily because you have to spend so much money to service it. So rising debt, rising interest rates is a deadly concoction fiscally. Once people start to feel that pain, then I assume we'll do something, but there's no prospect of that happening in the short term.
The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier, with no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
Workers do not want to come back to the office, Mark. There is a continued fight by employees out there.
I disagree. After the traffic for the past 2 days.
That was
horrendous.
That was one of the reasons that they cited is complaining about commute as well as childcare costs. A little bit, to me, sounds like get the small violin going, though I do enjoy the benefits of working from home on occasion as well. But this is just part of the deal. One person referenced in this Wall Street Journal piece lives in Philadelphia and commutes to work in Manhattan. You have to geographically position yourself a little bit closer before you fall into that example. They just pick out extremes.
I love my flexibility, but I commuted for almost 30 years. So I'm not going to pull age rank here, but I feel like you do have to pay your dues. Every whiner in this article, forgive me, but I'm with you.
Yep.
Every entitled whiner in this article is in their 30s. They haven't even been working 10 years.
Very
guys,
true.
fight 128. While you're premature, your arteries are hardening and you're prematurely aging. You can see your hair falling out in the rearview mirror. Do that for 25 years, and then maybe agitate for a little bit of flex time, which we offer here, and it's terrific, and I take advantage of it, and I sympathize. But how are you supposed to be mentored? How are you supposed to learn and earn the trust of the people in charge who are responsible for, ironically, they're shooting themselves in the foot financially, I think, because they're not positioning themselves for a promotion, right?
I agree. You need to develop that rapport, particularly if you're a newer employee of a firm. You need to develop those relationships, and I don't care what you say, they're not developed by doing Zoom calls if you're a new employee to a firm. Those are very regimented 45-minute to an hour block periods where there's not very much room for additional conversation or just a pop by. You need that in-person presence, and managers are pushing for it.
Isn't there some middle ground? Like, I strongly believe in daily presence, but I'm the first person to take advantage of flexibility around that. If I can avoid the commute, I will, as Tucker knows when he asked me this morning, hey, you coming in to do the show?
Hey, it's 9:40.
Or do I have to fire you?
It's 9:40. Where are you?
I don't think I could have done it
But
without
isn't there
you.
a happy me? Isn't there? You had to call me, too. I'm sorry, the whole firm had to call me and ask me where I was. Hey, guys, I'm at Dunkin' Donuts. Chill out.
It's this damn traffic, guys. Why do you make me commute in for the show?
Hey,
But isn't there a happy medium?
Is that a shower I hear in the background?
But there's a happy medium, though, right? It doesn't have to be I live in Colorado and work in Boston or I'm out of here, right? I mean, be reasonable.
I continue to say, and Mike has pushed back against this, that when the labor market is no longer tilted to the employee side of the pendulum, that there will be much more of a presence in office. Mike is of the opinion that this is more of a permanent change where remote work will be part of the future. We shall see. Who knows where this falls, but we'll continue to monitor. We're going to take a quick break here on the Financial Exchange, but when we come back, a little bit of Stack Roulette. That's right after this.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Creating the right estate plan to help secure your future takes effort. There are plenty of mistakes that you can make, any one of which could have a dramatic and damaging effect on your financial strategy. Cushing & Dolan are experts in estate planning, and today is the last day to get their new guide called Detour Ahead, Estate Planning Potholes to Avoid. In it, you'll learn about these critical errors so that you can make the right decisions to always protect your assets. As an example, if you've got an existing trust that hasn't been updated in the last several years, you're setting yourself up for problems. Cushing & Dolan's new guide will help you address issues like this, and today is the last day that you can get it. So call right now, 866-848-5699, and ask for your free guide today. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier, with no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
If you're thinking of retirement in 2023, you'll need to create a plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A big piece of that plan is taking a closer look at your current income sources and expenses. You'll need to know if you have enough room in your budget to live comfortably and remain as financially secure as possible. What's really key is maintaining a reasonable withdrawal rate to help you avoid outliving that money. These are among the topics we discuss in our new free guide, How to Retire in 2023. Call right now and get your copy today at 800-393-4001. Don't wait too long to get your ducks in a row if this is the year for you to retire. Call 800-393-4001 and get your guide right now, or you can request it from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
All right, it's time for a little bit of stack roulette. Mark, do you want to lead off?
Yeah, I'm not sure what the interest will be in this story. I actually pulled something off WallStreetJournal.com, Tucker, if that's okay. The headline
Never heard of it.
Grabbed me. The headline is NASA's UFO research team briefs the public. Okay, you guys have seen this. And I'll just read the first couple sentences. The team studying, this is a NASA team now, so these are serious people. They're studying UFOs.
Mm-hmm.
By that, we don't necessarily mean of alien origin. We just mean things that we don't know the origin of. Mm-hmm. Presumably, they're terrestrial, in origin. But the folks at NASA leading the assessment and identification effort are going to brief the public this actually, they briefed the public earlier this morning. Well, there were no big headlines.
I think it was at 10:30. They had a live stream.
Okay. I noticed now that this thing I'm reading about with all this excitement has already happened. We saw no breaking news, so I assume they didn't announce definitive existence of extraterrestrial activity or intelligence, huh? I just found it interesting that they were addressing this at such a high and official level. But again, we've heard no news, so I assume it was a big nothing burger.
It seems like that's usually how the UFO talk typically goes.
I'm just kind of skimming through the article because it was just released at like 11:20. It says one clip showed the view from the cockpit of an aircraft and a split-second flash of a spherical object flying to the right of said aircraft. Military officials said they have been unable to explain what that object was. Okay.
So where do you guys come down on this? When you hear, do you dismiss these accounts out of hand? Like I tend to. No, Tucker says.
No.
You don't dismiss them out of hand.
I don't. Because what the hell are they? What's going on?
I was
it's not
previously
a balloon.
In your camp, Mark, very skeptical, but now I've started to gravitate to the idea that it could be something else.
I mean, you're literally getting the government acknowledging like they don't even know what these are.
But because of the security threat, they have to look into it.
Yeah,
I think you have to operate from the assumption that it's
right.
It's something sent up by a foreign government.
I've also
for
talked
nefarious purposes.
An Air Force pilot before who has mentioned that in training runs or things that they've done, there's been activity on their radar that just they can't seem to match where it's coming from. And so those types of stories you start to hear and you say, okay, maybe, perhaps. There's something.
I mean, there was probably the biggest story was a couple of years ago. But it was like mid to 2000s. I'm going to say like that. But it was aircraft, military aircraft. I think it was off the coast of San Diego. Have you guys seen this video? It was like literally you can see it lock in on a target, and then it just disappears. Boom, gone. And they're like, I don't know what that was.
Right. I think there's something to that. Mark, you disagree?
I don't know. I guess is the point.
No,
I want to see. I want to see one crash landed. I want it to be definitive evidence. Otherwise, it's probably too easy to, for people like me anyway, to dismiss as something we can't explain, but isn't necessarily anything spectacular. I think we all wish it was something spectacular that would probably solve a lot of problems here on Earth in terms of realizing we've got potentially bigger problems than each other.
Yeah, the inflation becomes a much smaller problem at that
I think
point.
you'd hear us talking about that.
A Georgia couple buys Chili's for wedding guests. They fed 99 people for less than $2,000. So a couple in Georgia has gone viral for choosing to order their wedding food from Chili's. This would come out to about $20 a head in terms of cost per plate at this particular wedding, $2,000 for 100 guests. Can you guys guess what the average cost per person is at a wedding in 2022 as done by the Knot?
I'm going to guess $150.
Mark? Yeah, I was going to come in a little lower, but I could see. I mean, depends obviously, but sure.
So I think we're influenced a little bit by our area where it's a bit higher. Between 51 and 100 people in terms of guest count, the average spent was $70 per person on average. With a guest count over 100 people, it was $80 per person on average, according to the Knot's findings.
Oh, I was way high then.
I think that if you look at wedding venues around this area, Tucker, your guess is much more in line with the Northeast, perhaps going throughout the whole country or tying in these Georgia Southern Belles at $20 a head brings down the overall averages to $70 or $80. But in terms of a wedding gift, if people go by the traditional numbers, which even in Georgia I would guess $100, right, minimally for a gift, then they're making out some significant money. I would imagine that some people would have a bit of pushback, though, because oftentimes your gift is supposed to cover your plate at least to a break-even point, maybe a little bit over, but not 5 times more than the $20 a head.
I mean, I'm looking at like what the couple served from Chili's at the wedding. It says the couple served chicken tenders, sliders, egg rolls. Get this, chips and salsa.
Oh, my gosh. A lot of high margin on that.
For the entrees, Cajun chicken pasta and salad during their buffet-style dinner reception. And the delivery, the $2,000 cost was for food only and did not include delivery or setup. So somebody had to go pick this up at Chili's. Yeah, order for Jimmy here. Oh, the $2,000 order for the wedding? Oh, okay.
Some feedback was normalize this. Weddings are so out of control. Such a great idea. I can't blame you. It's hard to find stuff that offers specialty diets at some venues. I don't think I side with the TikTok and other viewers out there. I think you need to find a little bit more of a middle ground here in terms of what you serve at the wedding. No,
Were they financially constrained? I mean, is that the?
I would imagine.
Or were they just trying
right?
to be
I mean,
cheeky?
To be fair, weddings are extremely expensive, right? I don't know if you need to go to this level, but weddings are an expensive endeavor. But I don't think Chili's is going to really build out its catering business.
I will say though, I have been to a couple of weddings where the dinner, or it was like a post-wedding snack even, was getting a food truck or 2 food trucks. That was actually one of the dinners once, and I was thrilled with it. I was like, this is awesome.
The food trucks are phenomenal, and I've had that before at after parties where they have sliders, pizza,
and it's like
left
basic
out.
food,
It's
but
very
it's
basic,
really,
but
it's really good.
It's necessary after a night of drinking and dancing.
Yeah.
You're looking for that kind of thing. So there is something to be said about that. But the wedding industry in general, really what you need for a good wedding is good music and drinks. That's the main thing. So I guess if you want to skate by on
but the Chili's wedding dinner, I don't know about that one.
Maybe we could go a little bit better than that. Taking a look at markets here, we've got the Dow Jones off about 250 points, down 0.75%. S&P 500 is also off 0.75% as well. The NASDAQ is off about 0.7%. The Russell 2000 is really taking on the chin, down over 1.5%. Taking a look at some of the other economic indicators out there, U.S. 10-year Treasury settling in around 3.65, down about 4 basis points. If we take a look at oil, they are also down at around $69 a barrel. In terms of more news today, we're looking to see if the House will vote to approve the debt ceiling negotiations. That will be decided later this evening. It did receive initial approval, but we're hoping that it can be finally approved this season so that debt ceiling negotiations are behind us here. And going forward, we'll also be looking at some inflationary and housing data over the course of the rest of the week here. In terms of major market movers out there, Nvidia still hanging in there at close to that $1 trillion market cap. That's all the time that we have for today's show, but join us here again tomorrow morning at 10 a.m. Thank you so much for joining us.